special shout out to our sponsor, Qualia. Qualia is the category-creating digital closing platform used by thousands of lenders across the country to seamlessly work with their title and escrow partners. By working better together, Qualia is powering lenders to deliver a differentiated closing experience for their clients. Through real-time communications, closing status updates, and workflow management, Qualia brings lenders together with home buyers and sellers, title and escrow agents, and real estate agents for a secure and seamless closing experience. Qualia is proud to have been awarded the Housing Wire Tech 100 Award for real estate, as well as CB Insights FinTech 250 Award. Discover how you can work more efficiently with your title and escrow partners at qualia.com/innovators. That's QUALIA.com/innovators.
Hello, everyone. If this is your first time joining us, welcome to the Mortgage Innovators Podcast, where we deliver fresh and hopefully entertaining insights on all things mortgage and the innovation propelling our industry forward. My name is Michael Guidotti with American Pacific Mortgage, and this week we'll be playing an Innovator Insight from the 2022 Mortgage Innovators Conference that happened just a few weeks ago. Featuring some great speakers, this panel discusses the state of eClosing, touching on real-world lender case studies and giving us insight into the borrower's perspective that I know we all want. Please enjoy, and thank you for tuning in.
We have a lot of good eClosing information to talk about this morning, and we'd like to also start by doing a quick survey of the audience. But before we do that, I'm going to ask our panelists here to each introduce themselves briefly, and then we'll kick off the session here. And we'd like, by the way, we want to make it as interactive as possible. So if you do have a question, feel free to raise your hand. We really do have like the sun shining in our eyes up here, so feel free to wave your hand around so we can see you asking a question here. We'd love to respond to your questions as well. So Mike, why don't you start off?
Thanks, Harry. Mike Sachdev, President at SnapDocs.
Good morning. Angel Hernandez, Vice President of Industry and Regulatory Affairs at Stavi.
And good morning. I'm Brendan Weiss. I'm co-founder of EscrowTab.
Great. And I'm Harry Gardner. I'm Director of Digital Services for ICE Mortgage Technology. And so to kick off, we can level set a little bit about eClosing in general. My eClosing journey started back in 2001 with the Mortgage Bankers Association, back when we were just meeting and MISMO was relatively a very new organization. And we were kicking off this effort to generate the standards and the guidance and the platforms that would form the foundations of an electronic mortgage. This was before the MERS registry even existed, before the SmartDoc eNote existed, any of those pieces. So we were working very hard to come up with an industry framework. So one of the main things we'll talk about is the foundational pieces of every eClosing. You've all probably heard the term hybrid versus full eClosing. A hybrid eClosing in general just means that at least some of the documents are on paper. And the way you can think of it in terms of the eClosing package is you can divide it up into kind of 4 logical components, and all of those components affect the eligibility or the e-eligibility of how your closing can be. And our panelists are going to talk about those different pieces. So we start with the electronic note, right? And the note can be electronic if your investor will accept an e-note and purchase it, or if you're going to hold it in portfolio. Then there's the notarized documents. So there's the lender notary package plus the documents that come in from title. And if you can do electronic notarization and electronically record those e-notarized documents, then those can be electronic. Then the third piece would be the lender's ancillary documents, which can almost always be done electronically. So that's kind of the low-hanging fruit to get started with a hybrid eClosing. And then the last piece are the rest of the documents that come in from title and settlement, and if you can get those tagged and ready for e-signatures as well. So if you think of those 4 components, then you can kind of think of the framework for e-eligibility. So I'd like to ask each of our panelists to kind of touch on those aspects and talk about it from their perspective and where we are in as far as the state of the industry goes for electronic closing today. Mike, why don't you lead off?
Thanks, happy to go first. And it is very bright here, but I'm going to assume you're all smiling. Yeah, so I agree with the way you framed it up. We see eClose as primarily challenged by fragmentation, which is to say every loan has its own path to its most digital outcome. And so the best way to get to a digital portfolio of loans is to understand on the front end how each loan can be, and then route it to that outcome, which means having workflows that can understand based on regulation, based on preferences. There are a lot of parties in a closing, and all of them have preferences. What is the best route for that loan? And so our view is, absent very detailed workflow and a bunch of effectively like artificial intelligence decision making along the way, you can't take a portfolio of loans and close them all digitally.
All right, well, I think that raises the bar for how quickly we can get there. So I would like to take a bit of a different take. So what I would say to begin my remarks is the state of the eClosing union is strong. I think it's a phenomenal journey we've all witnessed. Harry, I know you referenced sort of where things began just over 15 years ago. And as we look at all of the infrastructure that's in place today, whether it's standards, technology providers, educational materials, I think it makes that reality that we've all sought of a digital end-to-end ecosystem, within our grasp in a way that, perhaps when I got engaged in the topic about 6 years ago, I could not have imagined. So everything, that you're saying, it's right. But I think we also have the metrics, the tools, and the environment in place to make that shift. There was, Harry, I think we shared a similar stage a couple of years back in 2019, and the question then was, well, when will we really make that transition, right? And back then, I said to folks, well, I'm betting on July 9th, 2025 will be the first day where 51% of all new originations are done as fully e-loans. People ask me why July 9th, 2025, and I said, look, that's kind of like a really big birthday for me, so I just wanted to have a nice birthday gift. And I think, look, I'll hand it over here to Brandon here to sort of maybe talk about it from a different perspective, but I think it's important for us to contextualize that. Yes, there are a lot of things that we need to figure out together to fully transition a portfolio, but we have the tools, and what we need now is the partnership and really that will to make it happen. And I think all of us on the stage here are here because we want to help you do that.
Thanks, Angel. And just so everyone knows, Angel's the guy that made it happen at Ginnie Mae for eNotes, so we have him to thank for it.
Thank you.
I didn't expect that big of applause, but
That's very kind.
no, I mean, from my perspective, Angel's right? The technology is there. If everyone saw Bill Dallas yesterday, he made a couple points, one of which is that it's really hard and messy to do loans well. And on the eClosing aspect of things, for a long time, everyone has said lenders need to take the lead and they need to procure this technology and they need to push it out to their title companies, and then they need to push it out to the notary field, and it hasn't really resulted in a whole lot of adoption, right? Because lenders do lending as well as they possibly can, but managing the closing process hasn't been something that they have really been willing to take on for very good reason. So we kind of focus on it in the perspective of take the lift off the shoulders of the lenders from the start and really let the lenders do what they do well and push it out to the partners that they've trusted for a long time. And just simply saying, yes, we accept, fill in the blank, this process can advance a lot faster depending on the technology that you're using. So, I think the tech is there, and then it's just about having some of the will to say, yes, we are willing to accept legally signed documents in the States. And at that point, you're kind of off to the races, and you continue to trust those partners that you've worked with for a long time on the title and settlement side.
So two of the biggest metrics that the industry is always interested in, One is overall e-note production and e-note acceptance by investors. And I think the news is good there. It's to Angel's point, we want to get to 50% and by his birthday. But even today, back in the early days, of course, we were looking at 0.1% of the industry's production was an electronic note, numbers like that. But today, and we track this at MERS, which is part of the ICE Mortgage Technology family of companies, we track month by month the number of new e-notes produced every month and what proportion they are of overall originations. And the good news is that e-note production in general is running around 40 to 50,000 e-notes every month in the industry today. And the overall proportion of e-notes versus all of the loans that are registered on the MERS system is running on average around 6.5% to 7%. So quite a bit more than the fraction of a percent from the original early days. And in fact, Fannie Mae told me recently that of their loan purchases, about 10%, because of the bracket of loans that they generally buy, about 10% of those are running e-notes in terms of their proportions. So that's, I think, a really good news sign, and I think within a few more years, we'll see that e-note proportion just continue to rise steadily. The other aspect is, in terms of e-eligibility, is electronic recording by the county recorders, which is a little bit, kind of like the tail wagging the dog, right? The local county recorder has to be able to record those documents. There's a lot of leeway for them to make judgment calls about whether they think a notarized document should be recorded. If they think there's anything amiss with that document, they have the right to reject that recording. So the acceptance of an electronically signed and electronically notarized document by the county recorder is critical for electronic recording to get to that holy grail of a full e-closing. The good news there is that at Simplifile, for example, or overall in the industry in terms of electronic recorders who accept e-recording, which Simplifile tracks very closely, it's out of the 3,600 county recorders around the country today, over 2,400 of them are e-recording. And that actually, because that encompasses nearly all of the very large counties in the country, from a population perspective, over 93% of the US population is e-recording enabled today. So that hurdle or that headwind in terms of getting to a full e-closing has been greatly reduced over the last 10 years or so to the point where we are today.
I think it seems like we're all kind of agreeing that the pieces are in place. I think what is probably more interesting for us to talk about is what's preventing vast adoption. My view is, and I'd love to hear from all of you on this as well, is that it's really a couple things. I was on a call this morning actually with a lender talking about how in the current environment where maybe there are lower prices available or less buyers available for loans, taking a risk on an e-note is not the same risk today that it might have been a year ago. You're not sure you can sell it, not everyone is accepting it. So it seems like e-note adoption is still one of the things that's a little wobbly. And I think that when you think about wanting to get to the full portfolio of e-note, we kind of have two paths as an industry. One is we can say, we're gonna wait till everyone says yes to this and then convert. And the other is we're gonna do things like you were describing earlier, Harry. We're gonna do hybrids, we're gonna take our loans through an e-eligibility process, we're gonna make our portfolio as e as it can be. I think what I'd love to hear from the other panelists on is what do they see as the barriers?
Well, I'd like to hear from our audience today, really quickly. Just and like Harry said, you're brighter than you've ever been today for us. I mean, those lights, which I'm sure is just a reflection of all of you and who you are being here at an Innovators Conference. But just, if you could, for a second, if you have attended at least one other session in your life about e-mortgages or e-closings or RON or e-signing, can you just quickly give me an eye and show of hands? Also the eye, though, please. Eye.
Can you see anyone? Yeah, we need the eye.
Yeah, we needed that. So, and I think, at each of those, right, we discuss the progress, we discuss the challenges, we discuss the things that are going well, the things that are difficult. If you ask me about, what it's like for a lender taking a risk in this environment, I think what I would say is it's unlikely that we can ever at any point to say this is the ideal time, right? if production is really good, then perhaps there's not enough time to pause that, right, to adopt e-notes. If things are slowing down, then as you noted, perhaps there's some risk assessments that need to happen. What I would say, and at Stavi, what we like to say is, look, we want to partner with you no matter where you are in your journey. The fact is that anything that is worth doing might have a degree of difficulty, and that is when having the right partnerships in place and the right thought leadership and the right champions. So that's why I asked you, how many have you attended something like this before? Because at the end of the day, what is going to tip the scale, it's not going to be those of us on stage. It's going to be you and how much you're willing to champion and how much you're able to really take on the difficulty of bringing about a better tomorrow for our industry. I'll just take 2 more minutes really quickly, and just because it came to mind. I'm sorry, it came to mind. So I have a 4-year-old, and I try to read to him whenever I can at night. And reading to him The Little Prince kind of made me think about a discussion that we're having today. And that there's this section in The Little Prince where The Little Prince, if you haven't read it, please go out and get it. It's a phenomenal children's book. It's a few pages long. But, it's a bit of an indictment on adulthood. And it says, look, adults forget to be children and what it was like to be children and to really dream. And we start caring about things like numbers. And I think we come to a panel like this and we see that like play out. Well, we've had this many notes now, we have this many states, et cetera, right? So, but they forget about all the things that really matter. When they meet someone, they ask them about numbers. What do you earn? How long did you study? They don't ask about the important things like, well, how does his voice sound? How does he like butterflies? So what I want to ask you today is to think about the things that really matter, right? So any provider, any tech partner that you have that is worth being your partner is going to be able to deliver to you those metrics that you care about, right? The assistance, right? The reductions in price, and we could spend time talking about that here. But the fact is, again, that should be the minimum threshold. What I want you to think about is, what does it take for you to be able to measure success in human terms? And the number of times that, the homeowners that do business with you walk away from a transaction saying, that was amazing, right? So, we're focused on getting you to measure success along those levels, right? In experience, in humanity, and really in just the value and enjoyment of the work that we do and those that we interact with.
It's tough to top that. From our perspective, it's really about helping people kind of move down this journey much faster than they would have otherwise without any real work, right? And I think having the technology out there that's available gives you the ability to decide whether it's worthwhile to you. Obviously, in this environment, we have much more opportunity to take some risk, right? When I was at a former company, when volume was down in the market, that's when we always took some risk in terms of trying new things, right? Roll out new pricing model, roll out new technology. This is the time to do that and to see which partners are really going to be the ones that you want to work with the most. And that's the biggest test for anybody, right? Is building trust in those new counterparties that you might not have worked with before. Just on the eNote side, we've been pecking at the list for a while. When I was at MERS, it was about getting secured party rolled in. It was getting warehouse lenders, investors, servicers, all those counterparties rolled in. And we largely accomplished that. It's obviously not 100% yet, but more and more conversations that I run into with investors is that they're hearing from lenders and losing business because of it. And that's what ultimately changes people's behavior. Not that the lender really has to do a whole lot other than have a conversation in that case. Pricing, you mentioned, or I think you mentioned, is obviously key. And we've had a couple of lenders who have broken down the numbers to say, well, if 20% of my investors are not taking eNotes, how hurt am I going to be if they're not available when I have an eNote? And if any number matters to you, then you're not going to want to do it. But if you're willing to improve your process and take the risk on a little bit of basis points, if one of your e-note acceptance investors isn't going to buy it, then you can move forward and drive your partners that way.
Yeah, I think the picture for ROI on an eClosing investment has been pretty well established. There are a number of studies out there showing anywhere from $250 to even $400 or $500 a loan in potential lender savings and cost savings, and obviously that's important. To Mike's point, I think a couple of the hurdles or headwinds that originators have seen so far and things that you need to be aware of. Number one is if you're doing an electronic note, and it's relatively easy to, as Brendan was just saying, to do the ancillary documents and layer on an electronic note. If you're delivering to Fannie or Freddie, they're open for business. It's a very straightforward delivery mechanism. The one thing you need to be aware of is that that an e-note is different than a paper note in terms of there is an additional section of text in an electronic note that's not present in a paper note. That text identifies the MERS registry as the registry that the note will be registered on to identify the legal ownership and kind of close that legal loop. So you do have to decide pre-closing that loan is going to be eligible for e-note delivery to an investor, right? So that's a change from the mainstream paper process today. It's certainly not insurmountable by any means. People are doing it 50,000 times a month already, but it is a change in process that you have to be aware of. And the other aspect is just what type of e-notarization, if any, you're going to be doing, right? And we saw a huge boost in remote online notary at the beginning of the pandemic. In March 2020, the RON vendors that were already well established and the lenders who had already moved forward with remote notarization were feeling very fortunate that they were already established in doing that. The RON vendors were like the guys, like the dog who caught the mail truck, Suddenly they had a list of 50 or 60 lenders who were in their pipeline who wanted it tomorrow. We need remote online notary instantly, right? But it is very doable. Remote online notarization is very well established. And in terms of that county recorder acceptance that we talked about earlier, I think one thing that's important to understand is that remote notarization in general is controlled at the state law level, right? State by state, there's different RON laws in different states. But there is kind of a popular misconception that you can't do a RON e-closing if that state doesn't have RON law established. The reality is that because the notary can be remote, you could do a RON e-closing and use a remote notary from another state who does have established RON law, and really the gating factor is more to do with the county recorder and whether they'll accept a remotely notarized deed of trust, for recording with the county. And that does vary widely, and that's a very granular level of e-eligibility that you want your solution providers to be able to give to you. So it's important to ask, when someone says they have e-eligibility, what level is it? Do you go all the way down to the county recorder level? Do you know what they will and won't accept? County recorders in some cases will accept an e-notarized document in general, but not a RON, not a remotely notarized document. Many of them do accept a remotely notarized document, but a small percentage of them specifically will not record a security instrument that's remotely notarized, but will record other general purpose remotely notarized documents. So there is a lot of granularity there, and it's important to ask your providers if they can provide you with that level of e-eligibility, because it is very important to know that to have a smooth process.
I'm struck by the discussion that we've had here this morning. It's been largely about kind of the factual and regulatory barriers, and the fact that we think in a lot of cases you can have a very e-loan. But I think we should also talk about the behavioral barriers, kind of the choice barriers. So I'm curious, I'm going to take a cue from you here. How many lenders here have purchased an eClose solution? I don't actually see any hands.
I see everybody with their hands raised. I think I am looking into the future.
That's amazing. I've asked this question in groups before and seen a lot of hands go up, and then the follow-up question is, how many of you have achieved high levels of adoption? And then all the hands come down. And I think that the adoption question is actually also really interesting because we're saying to you that we think a lot of the barriers have fallen and you can do it. But then what ends up happening is there becomes this question of, well, why would I for one loan? Or why would I for one eNote? Why deliver a great CX to one borrower? And so I really think the piece of this that's truly missing for us as an industry is creating the understanding that every e-loan is still better than wet, which is to say, hybrid creates a lot of value for our customers. E-notes create a lot of value for our customers. Going all the way to Ron creates a very differentiated experience. And so thinking about the problem in that adoption perspective is important.
Yeah, I mean, I think we're all here in person at a conference and doing business. And that's what this industry has been based on for a very long time. And I think to some degree, there is good examples of using remote closings as an experience for particularly the seller, for some modifications. But this is still like a very personal business and personal experience for people. And we kind of take this view of most of these closings are still going to happen in person for a very long time. And there's good reason for that, right? Like there's a lot of risk that lenders are taking and settlement title companies are taking. And but it can be done electronically and in person, and with a very light touch on behalf of the lender. And those are the types of ways that the industry is going to move forward. And then as we progress down this path, all the other technology is going to just integrate very perfectly with the other solutions, and you'll be able to click a button and have the decisioning done for you. But we're not there yet, right? And people need to just see what is it that's really happening in this experience for a mortgage closing, or whether it's a branch closing for HELOCs, where a bank really wants to interact with that customer to make sure that they're providing as much value through financial services that they can get. Again, Bill talked about that yesterday. Why aren't there other services that mortgage originators are offering their customers? Those customers don't get adopted unless you're interacting with them. I mean, that's why we're all here. I think that all these solutions that are in the market are going to continue to rise. And right now, we just need to see, like, how can we get the machine moving forward with it so that lenders and title companies are all getting the efficiency that they know they want to achieve, but just haven't had maybe the time or capacity to deal with it. And now's the time to take that risk.
When it comes to the adoption, I think I no longer see it as a road with bumps on it. I really do think we are on a curve that is expanding, and we are in the midst of that compounding that leads to adoption. Brendan, when we used to talk about the problems we have, I mean, just the discussion today around the problems that we see is so drastically different. I would say just three things on what I think is going to tip that. Number one, really is just changing expectations by everyone, right? So at Stavi, now that we've had some folks do eClosings, we're now deploying the same tools for modifications, for foreclosure, and increases the value proposition of the same tools, right? Of eSign, of Ron. So even if someone had done like an IPEN closing, right? The fact is that consumer's expectation has changed. I think the same is going to be true for the workforce that we are seeing. And at the end of the day, I think the efficiencies we can build are going to take over. So I do think we are simply on a curve of adoption. I think, I am happy to get with any of you. I think all of us would be to answer any more questions. I know we're running short of time, but I think we're on the path.
Yeah, thanks, Angel. And one other thing I just want to make you all aware of before we wrap, we're about to run out of time here, but one of the uncertainties that's been present in the industry with specifically related to RON eClosing is the fact that there's a video recording of every remote notary session, and those recordings are stored either by the RON provider or in some cases by the notaries themselves, the remote notaries. And so MERS has rolled out a central solution as a utility for the industry to provide a place where all of those video recording files can be stored centrally long-term for the life of the loan as a way to kind of build on that central utility that MERS provides the industry today, and to add confidence that those RON videos will be present 10 years, 15 years down the road, and you'll know where to find them. So we're hoping that that will help reduce the level of uncertainty related to RON eClosing as well. So with that, we're out of time. I apologize. We couldn't see any hands waving, but we can't see much of anything. So feel free to find us after the session at any time. We'll be around the conference here, and we'd love to answer your questions or talk with you about your own e-closing journeys. Thank you very much.
Everyone, thank you so much for listening into today's episode. If you like what you heard, make sure to subscribe to the Mortgage Innovators YouTube channel or wherever you podcast. And until next time, take care.